Welcome to the Crypto Intellect, where we break down the biggest global financial shifts shaping the future of money, crypto, and institutional adoption in real time. And today's headline is one of the most explosive yet. XRP news today, Bank of America, everything runs on XRP now. Now, before we get carried away, let's be clear from the start. This is not financial advice, and everything discussed here is for educational and informational purposes only. Always do your own research before making any financial decisions. But what we are seeing right now across multiple major financial institutions is something that is forcing even longtime skeptics to pay attention. In just a single week, we saw Ripple Prime stepping deeper into post-trade clearing infrastructure, Goldman Sachs pushing forward with a multi-billion euro tokenized real estate fund, and Bank of America moving toward a real-time cross-border payment system launching next quarter. Three massive announcements, three separate giants, all moving in the same general direction toward faster settlement, tokenized systems, and digital infrastructure. The question is no longer whether change is coming, but how deep this transformation already goes behind the scenes of traditional finance. What makes this moment so important is not just the announcements themselves, but the timing and overlap between them. Ripple Prime has now earned a formal position inside the world's most critical post-trade clearing infrastructure, something most retail investors have never even heard of, yet it quietly powers trillions of dollars in daily global transactions. At the same time, Goldman Sachs is launching a 3.6 billion euro tokenized real estate fund, signaling that traditional assets are rapidly being digitized and structured for blockchain-style settlement systems. And then you have Bank of America preparing a new real-time cross-border payment system that is expected to roll out within the next quarter. When you place these developments side by side, it stops looking like coincidence and starts looking like coordinated evolution across the financial system. These institutions are not experimenting in isolation anymore. They are aligning towards similar technological frameworks that prioritize instant settlement, tokenization, and interoperability between legacy systems and new digital rails. That is where the deeper story begins to form. To understand why this matters, you have to understand the role of the DTCC, the Depository Trust and Clearing Corporation, which is essentially the backbone of post-trade financial settlement in the United States. This is not where trades are made, but where trades are finalized, confirmed, and settled between institutions. Every major stock trade, bond transaction, and securities movement that happens through large brokers ultimately flows through systems connected to this infrastructure. We are talking about trillions of dollars moving every single day through mechanisms that most people never see. Now, when the DTCC announces progress on tokenized services, it is not a small upgrade. It is a structural shift in how ownership, settlement, and asset transfer will function in the future. Tokenization means real-world assets like bonds, funds, and real estate are represented digitally, allowing them to move across systems with far greater speed and efficiency. And when Ripple Prime appears on the list of participating firms, alongside names like BlackRock, Citadel Securities, and Charles Schwab, that instantly signals a level of institutional seriousness that cannot be ignored. The presence of Ripple Prime in this ecosystem is where things begin to stand out even further. Ripple Prime is essentially Ripple's institutional-grade brokerage infrastructure designed for digital asset markets. It handles trading access, collateral management, and post-trade settlement in environments where speed and liquidity are critical. What makes this particularly significant is that Ripple Prime is not just listed as a participant in discussions or advisory groups. It is also identified as a netting participant in the NSCC directory, which places it directly inside operational clearing functions. That distinction is crucial because working groups only provide input and visibility into future systems, while netting participants are actually embedded in the settlement process itself. Netting reduces the number of individual transactions by calculating the difference between obligations between institutions, meaning only the net amount is settled at the end of the day. This is how global markets manage massive trading volumes without overwhelming liquidity systems. Now, when you combine that with the official trade date listed as March 2nd, 2026, for Ripple Prime's role in OTC settlement, the picture becomes even more concrete. Over-the-counter, or OTC, trades are not small retail transactions. These are large institutional deals involving structured products, private placements, and high-value financial instruments that never hit public exchanges. The fact that Ripple Prime is cleared for post-trade OTC settlement means it is now functioning inside one of the most important and sensitive layers of global finance. This is not theoretical testing. This is documented, time-stamped integration into existing infrastructure. At the same time, Ripple Prime's licensing across all 50 US states further reinforces its readiness to operate at national scale. When an institution reaches this level of regulatory coverage and clearing integration, it is no longer early-stage experimentation, it is infrastructure deployment. At the same time, another parallel development is unfolding through EDX Markets, a platform connected to Citadel Securities and other major institutional players. EDX has also been active within DTCC-related working groups, and shortly before these announcements, it revealed that it was adding spot XRP and XRP futures for institutional clients. That timing is important because institutions do not move randomly. They coordinate internally, test capabilities in controlled environments, and then release information once systems are aligned. When you see multiple institutions in the same working groups, reviewing similar infrastructure capabilities, and then releasing related product updates within weeks of each other, it suggests synchronized preparation rather than isolated decisions. This is how institutional adoption actually works in practice, through gradual alignment rather than sudden announcements. Now shifting to Bank of America, the story becomes even more layered. The bank is preparing a real-time cross-border payment system, launching next quarter, built on SWIFT and its CashPro platform. On the surface, this is presented as an upgrade to traditional banking infrastructure, allowing faster international transfers between financial institutions. Officially, there is no direct confirmation that XRP is part of this system, and it is important to stay accurate about that. However, the broader context is where the conversation becomes interesting. Bank of America has existing relationships with Ripple, documented patents that reference XRP-related frameworks, and ongoing exploration of digital asset infrastructure. This creates a scenario where legacy systems like SWIFT can operate in parallel with newer liquidity solutions, potentially using digital assets as on-demand settlement layers when needed, without replacing existing banking rails entirely. This hybrid model is becoming increasingly important across global finance. Instead of replacing systems like SWIFT, institutions are building layers that integrate with them. Ripple's technology is designed precisely for this type of environment, where blockchain-based liquidity solutions can operate alongside traditional banking networks. In this structure, XRP does not necessarily replace fiat systems, but acts as a bridge asset for liquidity in cross-border settlement. That means banks like Bank of America can maintain global SWIFT connectivity while also exploring blockchain-based settlement efficiencies behind the scenes. This dual-system architecture is not speculative in concept. It is already being discussed across multiple financial institutions as part of broader modernization strategies. At the same time, SWIFT itself has been exploring blockchain-related infrastructure in collaboration with Ethereum-compatible technologies, including systems like Linea. This introduces another layer of interoperability, where multiple blockchain ecosystems can theoretically connect through standardized smart contract environments. The XRP ledger also has EVM-compatible extensions in development, which means it could interact with similar infrastructure layers. This does not mean direct integration is confirmed, but it does show that the technical environment is evolving toward compatibility rather than isolation. In global finance, interoperability is becoming the key design principle, and that shift opens the door for multiple digital asset systems to coexist within the same financial architecture. Another important factor in this story is the leadership and institutional direction inside major banks like Bank of America. The appointment of executives focused specifically on digital asset transformation signals that this is not a side experiment anymore. It is becoming a core strategic initiative. When long-term banking executives with decades of experience are assigned to lead digital asset integration, it reflects a shift from theoretical exploration to operational planning. Combined with existing patents and infrastructure research, it suggests that major banks are preparing for a future where digital assets play a defined role within institutional workflows, even if the exact implementation timeline remains unclear. At the same time, Ripple's own ecosystem documentation has reportedly referenced major financial institutions including Bank of America, JP Morgan, Barclays, and Deutsche Bank in the context of treasury and liquidity systems. While these references are not always presented as direct partnerships in the traditional sense, they do highlight the scale of institutional engagement Ripple is operating within. Ripple Treasury systems are designed to manage large-scale liquidity flows across global enterprises, handling multi-currency operations, cross-border visibility, and real-time financial coordination. When systems at this level are being used or tested by global banks, it indicates that digital asset infrastructure is no longer confined to crypto-native environments. Goldman Sachs also adds another layer to this evolving landscape. Through its digital asset infrastructure and tokenization platforms, it is actively participating in the movement of traditional assets onto blockchain-based systems. The launch of a multi-billion euro tokenized real estate fund demonstrates that high-value real-world assets are being structured for digital settlement environments. Even if XRP is not directly involved in every one of these projects, the broader trend is the same. Financial assets are becoming digitized, fractionalized, and transferable through blockchain-compatible systems. That alone represents a massive shift in how global capital markets operate. When you step back and look at all of these developments together, Ripple Prime inside clearing infrastructure, DTCC tokenization progress, Bank of America's real-time payment system, EDX markets listing XRP products, and Goldman Sachs advancing tokenized funds, the pattern becomes difficult to ignore. This is not about one company or one token. It is about the restructuring of post-trade settlement, liquidity management, and cross-border value transfer at a global scale. The systems that once operated in isolation are now converging towards shared digital frameworks, even if they are implemented gradually and quietly behind the scenes. And that brings us to the final question that investors are left with. Not whether XRP will take over everything, because no single asset operates in isolation within global finance, but whether it has already positioned itself inside multiple layers of institutional infrastructure that are now becoming active at the same time. The evidence suggests increasing integration, not speculation. Whether that leads to widespread adoption or remains one component of a broader ecosystem is something only time will fully reveal. But what is clear is that the financial system is evolving faster in the background than most people realize. And if you are following these developments closely, the real story is not hype. It is infrastructure quietly going live. If this breakdown helped connect the dots for you in a clearer way, make sure you stay locked in with the Crypto Intellect, because these institutional shifts are happening week by week now, and the next wave of announcements could reshape the entire narrative again.